All right, if you would go ahead and go to this and print out this handout and kind of work through it with me as we go along. This handout should have both the questions and the answers on it. I can't really stress the importance enough to practicing these and trying them on your own. I also have certain expectations, and one expectation that I have before you listen to this video is that you have read the chapter and made notes. Just watching me do it, I call it spectating. You really don't learn how to play a sport unless you practice it. You really don't learn how to do accounting unless you practice it. So sitting and watching me do this or saying, oh, that makes sense without practice won't get you very far. And I really want you to pass this class and succeed. So make sure you practice these. All right, so I have the discussion questions on this handout, and I also have the solutions to the discussion questions, but I'm not going to go through those. You can go through those. I'm going to go through these 3 or 4 problems on here, some of them rather quickly, and I'm going to scroll down, and there's the answer to the discussion questions, to the solutions as we talk about it. So here's the question. So we're going to indicate whether the following costs of an automobile manufacturer would be classified as direct material costs, direct labor costs, or factory overhead costs. So I just want to, we're going to get into it in this next problem, but there are 2 types of costs in an income statement. There are product costs and period costs. Okay, and product costs are costs that attach to a product. Product costs are direct materials, direct labor, and factory overhead. So for example, in a product cost, if I incur, let's go over here, $100 worth of costs, and I have 100 units, each one is going to have $1 a unit. Okay, so then if I sell 60 units, I'm going to have $60 that is sold or goes to cost of goods sold, which is an expense on the income statement. However, the 40 that aren't sold, they stay in inventory. So I'll have inventory of $40. And then next period, if I sell the 40, it goes to cost of goods sold. So let's go back to here. So I had $100 divided by 100 units equals $1 each. If I sell all 100 of them, all 100 goes to cost of goods sold. If I sell 0 of them, 0 of them go to cost of goods sold, and inventory is $100. If I sell 80, then $80 goes to cost of goods sold and $20 sits in inventory. So I think you get the point. They're product costs. They attach to the product and they get expensed when they're sold. On the other hand, we have period costs, and I'm going to go to problem 1.5a. Period costs are costs of the period. They attach to the year or the month or the week that they happen. So if I incur selling expenses in December, they attach to December. I could care less when I sold the product, which in some ways doesn't seem like it makes sense, but think about advertising. It's really hard to say, okay, I spent $100 or $1,000 on advertising. Which product did it sell? Especially if I do some advertising at year end. Did I sell the product in this year or next year? So it's really difficult to attach it to a specific product. Whereas if I buy 10 yards of material and I buy 10 items and I sell 6, it's easy to get a cost per item and say, okay, well, this yard of the material is in that product. And so I attach it to the product. So again, product costs, direct materials, direct labor, factory overhead, they attach to the product and are expensed when they're sold. Period costs are costs of the period. This one simply wants you to classify as direct materials, direct labor, or factory overhead costs. Okay, so what is direct materials? Direct materials are things that go directly into a product. If I'm making a car, it's the steel, it's the things like that. Direct labor is the workers of the people who actually touch the product. And factory overhead are all those other things that attached to a part of the manufacturing. So sometimes I like to think of two buildings. One is the factory, so I've got a lot of smoke in there, and one is the office building. Okay, so I've got a couple not so great windows there. If it happens in this building, it's a product cost. If it happens in this building, the office or the showroom, it's a period cost. So these attach to the product, these attach to the period. The easy ones that attach to the product are the direct materials and direct labor. However, the overhead, like of course you've read the chapter already, so you know what overhead is. It's anything that happens in the factory that doesn't go into the product. Okay, that will be a little bit more difficult to allocate to specific products when we make more than one product, but I will get to that when we get to it. So first, if I'm going to ask myself, is it a product? Does it happen in the factory, or does it happen in the office building? So does it happen in the factory, or does it happen in the office building? If it happens in the factory, it's a product cost, and then I have to choose direct material, direct labor, or overhead. If it happens in the office building, or I guess the showroom, it's a selling or administrative expense. So in this one, we're told that it's only going to be materials, labor, or overhead, so they're all happening over here in the factory. So depreciation on the robotic assembly line equipment, again, it's a product cost, so it's direct materials. Here's our choices: direct materials, direct labor, or manufacturing overhead. Direct depreciation on robotic assembly line of equipment, it doesn't go into the product either directly as labor or material, so it's got to be overhead. I call it manufacturing overhead, they call it factory overhead. Next one, a V8 automobile engine, that's direct material, goes directly into the product. C, steering wheel, obviously it's part of the product, you can touch it, so direct material. D, wheels, direct materials. Painting safety masks for employees working on the paint room, you don't see safety masks in a car, so it's factory overhead. Salary of the test driver, you may think the test driver would be direct labor. Generally, a test driver wouldn't test drive every single car. They would test drive them sporadically on a test basis, so they are overhead. If the test driver did test every single car for like 10 minutes, you probably could make them direct labor, but for the most part, test drivers don't drive every single car for 10 minutes. It would just take too long. Glass used is direct materials, and wages the assembly line worker, direct labor costs. All right, so we're going to go on to the next one. We're going to do the same thing as this one, but some of these can be product or period. So we're first going to ask if it's product or period. Again, ask yourself if it happens in the factory. If it happens in the factory over here, it's a product cost. If it happens in the office or sales building, it's a period cost. Okay, so salary of chief compliance officer of the company, they would happen in the office building, so that's a period cost, and this is probably general and administrative. So if it's not selling, then it's general and administrative, but this one's administrative. Power used by the painting equipment, so that's in the factory, but it's power. You don't see electricity in a car to make it, so that's factory overhead. C, instrument panel installed by in the airplane cockpit. You can touch it, it's part of the product, so it's product direct materials. D, annual bonus paid to chief operating officer of the company. The chief operating officer is administrative, so that's period administrative. E, turbocharged engines, direct materials. You can touch it. Interior trim, you can touch it in the product, so it's direct materials. G, cost of normal scrap for production of airplane body. Again, a lot of people get tripped up on this one. It definitely happens in the factory, so it's product. Some people say it's direct materials, but generally scrap we consider factory overhead. So think of the scrap as the edges of, if you're cutting out a piece of metal and you have the edges that you throw away, we know that each machine might need that, or so we try to spread that scrap over all the products. So let's picture us making t-shirts. So if we're making t-shirts and you need to make 10 of them, and each of them takes, approximately 2 yards each, etc., but we know we have a little scrap because of the ends, etc., we generally have that in overhead. Or if you feel like you're going to waste some, you would include that in overhead. There are times, however, you can argue that normal scrap, you want to just include it in direct materials as part of it. So for instance, if I said it's 2 yards of material and I'm going to ignore the cut off pieces, I'm just going to say it's 2 yards, and we can put it in direct materials. But most of the time the problem wouldn't be worded like that, and would not call it scrap. So scrap, we want to just allocate over everything, so it's factory overhead. Hourly wages of employees that assemble, they touch it, so it's direct labor. Salary of marketing department. Marketing is a selling cost, so we're over here in period selling. Cost of paving the headquarters of the employee parking lot. Again, this is general and administrative, so it's administrative expense. It's also headquarters, so that should have given you the idea that it was. Cost of electrical wiring, direct materials. It's in the plane itself. Next one, L, cost of electronic guidance system. It's in the plane itself, so direct materials. Cost of M, salary of plant manager. He's in the plant, so he's a product cost, but he doesn't touch the product and make it, so he's part of overhead. So anyway, he would supervise like 10 airplanes at a time, so you need to spread his cost out over the 10 airplanes. Cost of miniature replicas of airplanes used to promote those keywords means it's a selling expense. So we have period administrative. And right here. O, human resource department is administrative, so period administrative. Metal used for producing the airplane body, direct materials. Annual fee to celebrity to promotion again, so that's a selling cost. Okay, and so let's see where we are here. Oops. And so, annual fee to a celebrity to promote, we said, is a selling cost. Hydraulic pumps used in the airplane flight control system, that is actually in the airplane, so it's direct materials. Yearly cost of maintenance contract for robotic equipment, that is in the factory, but it's not part of the product, so it's factory overhead. Pre-built leather seats installed in the first class cabin, that's part of the product, so direct materials. Depreciation on factory equipment, it's in the factory, so it's overhead because it's not materials or labor. Special advertising campaign, that's advertising campaign, so that's promotion, so it's a selling expense, so period selling. Oil to lubricate the factory equipment, it's in the factory, but it's not part of the product, so it's overhead. Mask used by the painters, it's in the factory, but it's not part of the product, so it's overhead. Decals for the cockpit door, which is immaterial to the cost of the final product. This is kind of an important one, so notice some places would put this as direct materials, but a lot of times, since it's so small, they don't want to worry about adding a few cents to the direct material, so they just put it in factory overhead. So this is the key word there, right there, immaterial. Salary of chief financial officers, administrative. So I'm going to pause this now, and we're going to go over to the next problem. Okay, so for the next problem, I want to talk about the difference in the income statements for the merchandising business and the manufacturing business. Look at kind of this outside line here. We have, if you think of an income statement, you think of revenues minus expenses equals net income. Okay, in this particular one, we simply have one expense in this one, where we have revenues or sales minus cost of goods sold equals gross profit. Now we're going to have our period cost down here just a second. But notice what the income statement is. It's beginning inventory plus how much we added gives us how much is available. So think about this. If I started with 10 items, I'm just doing units, not dollars. If I started with 10 items then I added 50 more. So I have 10 plus 50, I have 60 available. And if I have 30 left, then I must have sold 30. So I'm going to do the same thing but with costs. All right. In a manufacturing one, I don't purchase it, I manufacture it. So this is beginning inventory plus cost of goods sold. So I'm going to go through that one. I'm also going to 57. One more. Okay, so we're going to walk through the statement of cost of goods manufactured. I want to talk a little bit about this, but let me pause this a second. Okay, so here's our product costs right here. The cost of goods sold ones are our product costs. Okay, so this is our income statement, and this is our period cost. So we have sales minus cost of goods sold is gross profit minus operating expenses equals operating income. So if I have $100 worth of sales and they cost me $60, and my gross profit is $40, and then let's say I have $10 of operating expenses, so I have operating income. All right, how do we do this cost of goods sold? Well, I want you to remember this. If I gave you started with 10 pencils, and you added 40 more, then you would have available of 50 pencils. And if you had 20 left, then how many you used is 30. Okay? And that is the format for inventories or cost of goods sold or cost of goods manufactured statement. So we're going to do this 3 times with 3 different types of inventory. Okay, so I'm going to have raw materials, work in process, and finished goods. And actually I'm going to try to copy this and put it over here. I want my income statement at the end. Okay, so I know that if I go through this, I know what I started with is beginning inventory. And I'm going to show you theirs. Make sure you write yours out a little bit better than mine. But with raw materials, we started with beginning inventory. Then I have what I purchased is what I've added. Okay, so this is beginning inventory, this is purchase. Then I'm going to have available. Then I have less ending inventory. And then I have my materials used. Okay, so you just need to know the terminology for raw materials. So that's our raw materials. Then for work in process, what I started with is beginning inventory. However, what I add to work in process are 3 things, and you're going to see with their formal statement, which I'll show you in just a second. They have a little bit more formal, but they add 3 things: direct materials, direct labor, and manufacturing overhead. Okay? So I'm going to actually put these over here. So my beginning inventory, let's say again, I'm making these numbers up, are 5. My direct materials a lot of times comes right from there. Now sometimes if you have indirect materials in your raw materials, it might not be this number because raw materials includes more than just direct materials. But if raw materials only includes direct materials, this number will be there. Then let's say our direct labor is 20 and our manufacturing overhead is 30. So I have my total manufacturing costs of those 3 numbers. So I have 80. Okay, so these are my materials that are used. Those are the costs of what's added. So beginning inventory plus added. What's added are manufacturing costs. Manufacturing costs are 3 things: direct material, direct labor, and manufacturing overhead. Okay, so what I started with is beginning inventory. What's added are 3 things: direct materials, direct labor, and overhead. That gives me available. And so my available then is my beginning inventory plus my what my manufacturing cost is 85. And make sure you spell things right. But ending inventory, and let's say is 10. And so now I have what's called cost of goods manufactured. Okay, and so my cost of goods manufactured is everything that's not still in ending inventory. Okay. So now I have that statement done. All right, and then my finished goods kind of has the same format. Insert a row here. Okay, my ending inventory of starts out with beginning inventory of finished goods. Make sure you notice that's finished goods. And then what's added is cost of goods manufactured. Okay, so my beginning inventory of finished goods, so let's say I had, I don't know, 12 of those, and I add my cost of goods manufactured, which comes straight from there. That gives me available. And so I have 87 available. I'm going to subtract my ending inventory of finished goods, and I'm just going to say that's 7. And so now I have cost of goods sold. Okay, and so what's happening, I want you to really picture this. What's happening is, I'm going to change this, okay, is that it is moving through production. As I buy it, it comes into raw materials, then it goes to work in process, then it goes to finished goods, and then it's sold. So it's going to go from finished goods to cost of goods sold. So this one is called my cost of goods manufactured statement right here. This one is called my cost of goods sold statement. And this one isn't necessarily a formal statement. You're going to see in the book, they actually sandwich this statement right in there. So we'll have this one kind of expanded and worked in there on your online homework. I tend to keep them separate just because it's easier for me. And then this statement a lot of times is sandwiched right in there in your income statement. So they don't necessarily have it as a separate statement either. So I want you to, we're going to go to this last problem. I'm going to pause. And I'm going to have this set up on my spreadsheet just so I can fill it in pretty quick. But remember, it's going through each of these, and I'm going to solve for these letters just by plugging in these. So this is materials inventory, so that's my raw materials. So make sure you don't say WIP or finished goods inventory. So my materials inventory is 100,000. Okay, now I'm not going to do comma. You can try it on your own, but I purchased 950,000. I probably should have deleted all these. I'm going to pause it well. Okay, and then I have materials purchase of 950. I have my cost of direct materials used in production of 938,500. So I know that this one is 938,500. Okay. So now I can back into what my ending inventory is. So I have available of 1,050,000. I subtract my ending inventory, and I know that I used this. So inventory is either sold or not sold. So if I have 938,500 used, then that one's not. Okay. So now I'm going to notice my direct materials comes over here. Okay, move this over. Direct labor is 286. I think I need one more zero. Factory overhead. Total manufacturing costs. So notice 5,998,500, that's that number. I've got it added up for me. Work in process inventory May 1st, so May 1st and May 31st, that's my beginning inventory right here. So I'm going to have 382,000. Finished goods inventory May 1st. So that is finished goods inventory May 31st. Sales. My sales is 90. Cost of goods sold, I don't know. Gross profit, I don't know. Operating expenses are $1 million. Okay, so now let's check these out. And you hopefully have your solution in front of you. But materials inventory is A, and that's raw materials inventory. So 111,500 is that number. B asks for total manufacturing costs. Whoops, I got to back into my cost of goods manufactured here. Hold on a second. All right, I skipped over this. I read this number and then put this one in. Okay, so I went back and changed it. My work in process inventory on May 1st was 400,000, so I put 400,000 up there. And my work in process inventory on May 31st is 382,000, so I put that there. Okay, so let's go back through these. My materials inventory on May 31st is 111,500, so I just simply backed into that one because I knew these other numbers. Letter B is total manufacturing costs, which are the sum of direct materials, direct labor, and manufacturing overhead. Letter C is cost of goods manufactured, which is 5,616,500. So again, it's just beginning inventory, which was given, plus my costs that are added, gives me available, and subtract my ending inventory is cost of goods manufactured. It pulls over into here, into the finished goods statement. D is cost of goods sold, so 5,635 is my cost of goods sold. Next one is gross profit, so sales minus cost of goods sold is gross profit, so notice that pulls up into there. And then my operate net income is 285. So I would encourage you to walk through this one and see how that looks. But I'm going to pause this and I'm going to bring up this actually, I guess we're going to go ahead and do Yakima because then I can show you how they do theirs. All right, so Yakima has beginning. Let me pause this. Okay, so we have materials inventory of 480,200. We have materials inventory at the end of the year is 50,000. Okay. Let me pause this. Okay, materials purchases are 710,000. All right, and so I know that 758 minus ending inventory of 50 is materials used, so I have 708,200, and that's, I believe, letter A. Okay, then I know my 708 pulls in there. Direct labor is B. I'll put that there first. I know my factory overhead is 446. And my total manufacturing costs right here are 2,484,200. Okay, so now I come back into direct labor. It's 2,482,200. I come back into direct labor and it's 1,330,000. Okay, let's see. Total. This is total manufacturing costs incurred in May, so that's just what is added. And this one is total manufacturing costs, so this is this number right here, 2,660,600, so that's both periods. And now I have work in process, and May 1st is 176,400, but let's double check that because this number plus this number should be that number. So I'm just going to back into it. So 2,660 minus the 248 should be 176,400. I wish they would have had you compute that, but they didn't. They gave it to you. But this plus that should equal available. Then I have my work in process ending inventory. That is letter C. And cost of goods manufactured, they give me at 2,491,500. Okay, so now I can back into my ending inventory because it's either there or not there. So my 260,000, so I have 169,100. The computer program put that, Excel just put that in brackets, but anyway. So then my finished goods inventory is 190,000. That gives me finished goods inventory. I want my ending inventory. I don't have it yet, but sales are 4 million. Cost of goods sold is 2,470. So now I can back into my ending inventory. Again, it's either available, it's either sold or not sold, 211,500. And let's finish up. Gross profit, I have got that done, 2080. And I said my net income is 1,500,000. So now I can back into my operating expenses of 580,000. Okay, so I want you to look at that and kind of write these out and back into it. Now I want to show you what the solution looks like, because as I said, they sandwich this statement right into the cost of goods sold. So expand that and throw that one in there, and they sandwich this statement right in there. So I'll pause it. Okay, so if you'll see this, this is the actual solution to it. This is their statement of cost of goods manufactured. So I want you to look at just this outside column right here. I've got 176,400, or maybe these two. 176,400, 176,400 plus 708 plus 1330 plus 446. Again, and you can see that this statement right here is these two. And then they have this one kind of sandwiched in there. These three columns are not magical by any means. They just force another column when visually it makes sense to have them backed out. So look at your cost of goods sold. Beginning inventory is 48, plus purchases is 710, gives you available, minus ending inventory is materials used, and they throw that materials used right there. Okay, now look at your cost of goods sold statement. And they simply have this statement sandwiched in with the income statement. So again, this is their income statement over here, 450 to 2470, etc. And then they have the cost of goods sold statement sandwiched in there with the 190. So you can do it either way. Your online homework is going to require you to do that. If you want to write it out on a piece of paper this way so you can learn it, because each of these statements, I tend to write them out like this because I like to say, okay, it's what I started with plus what's added. In this case, I add three things. Gives us available minus ending inventories, cost of goods sold. And those are the difficult things in chapter 15. And there's other things that is covered in your homework and you can cover and ask me questions if you do have them.